All right, good evening and welcome everyone to our last and final session of this Web3 and Crypto Basics Trading Bootcamp that we launched as a pilot program for our education hub that we are building out in partnership with EvolvH3R, Jana Crypto Queen, All Things Blockchain, and Finsightful. If you have found your way to this recording or you've made it here tonight on this live session and you have not joined, don't worry, you can access all of the materials in the recording by signing up. You can just scan the QR code that you can see on your screen, or if you're watching this on YouTube, the link will be in the description below. We will then be putting these as on-demand short courses, so please share them with your friends. And we do have more short courses coming for you, so stay tuned. This is just the beginning of the Education Hub. Tonight, Renee is going to be taking you through probably one of the most important parts, even though I'm not a crypto trader, but I know psychology, and I did try to become a Forex trader and a crypto trader, and they taught us about journaling and how are you mapping. So I know how important this last session is. So she's going to be taking you through all of that tonight. But before we do that, I'm just going to go through a quick few reminders. All the sessions are recorded. You know it. Jump into the group. So for those of you that are watching this recording for the very first time, big warning if you're new to crypto and Web3, it's going to be information overload. You can't learn it all in one session. You definitely will go down what we call the crypto and Web3 rabbit hole. It took me, I feel like I've been in this space since like late 2017, and I still feel like I'm a beginner. So just be patient with yourself. It's going to take time. It is an interactive program. If you jump into the group, myself or Renee will answer questions, will help you, will support you. And this is going to be continuously ongoing. It does not stop here. And always be careful of scammers. I know that I hammer this home every week, but even today, the CEO of a very large company, I woke up this morning and I was like, wow, that's weird. And that they had left all these groups, and I DM'd them and their account had been compromised on WhatsApp. These hackers are getting so sophisticated. We've actually decided that we're going to create a whole short course based on how we can teach people to have best and safe practices on all of your platforms. So this isn't just about crypto and Web3, but it's about how, do you have 2FA on your WhatsApps, your Telegram, your emails? What type of backups do you have? Scammers are getting super sophisticated. So please, and more in this industry, because they're preying on people that are looking to make money. So please just be super careful out there. It happens every single day. Quick disclaimer, everything that we provide for you in this program is educational purposes only, not financial advice. Always do your own research. We provide you with learning activities, both myself and Renee. We've curated these learning activities, and this is for you to learn how to go and do your own research. So we kind of provide you these guided these resources. So let's talk about events, because at all of our communities, we host lots of different events. And even though this may be the last boot camp session that we're delivering, lots more events coming up for you. We highly recommend that you register to our Luma. So this is the All Things Blockchain Luma. Next event that we have coming up is with MXC. We'll also be in Token 49, and we'll also be at the Australian Crypto Convention. For EvolvH3R, we will also be at Token 49 hosting a couple of events, and we'll also be at the Australian Crypto Convention. But we announce all of our events, whether they're online or in person, on Luma. So please make sure that you register if you want to stay up to date. So join the game. We have been playing a game for this entire time. Now, for those of you that are watching the recording and you're probably like, oh, I haven't been catching up, you still have time. We actually decided on Monday that the cutoff will be, I'll look at my calendar, but from the top of memory, next week, which what's the date next? 1 week from today, because we'll give you 1 week to catch up on all of your quizzes, get in there and engaging, and then we will announce the winners, which is on the Friday. Thank you, Martin. 24th. We will give you to the 24th, then that will be the cutoff. So on the 25th, I will be going in and calculating who the winners are, and then I will be sending out an email on the Friday, the 26th, with the winners. I will also be sending out an email on Friday, giving everyone a heads up that this is your last opportunity. You can get points for filling out a feedback form. We do have a feedback form. We want your feedback so that we can learn how we can make better improvements for future programs. So please, this is your last week to get into the game. What's up for grabs? Well, we have some cold, hard, stable coins. We also have some VIP merch boxes that will be sent out, and we have some tickets to either the Australian Crypto Convention if you're based here in Australia and you want to go. But we also have some tickets to the Blockchain Futurist Conference for those of our global friends that maybe we wanted to attend that conference. And then we're also be including an Evolver scholarship, which details to be announced on the date. But this is a mentorship program that is focused on mentoring women specifically. So even if a male does win this program, unfortunately, you will not be able to participate in the scholarship, but you can gift it to a female that you know that can join the program. So as always, if you've been following along, or if this is your first time and you've just found us, always use a demo account to start. Renee has a go back, watch the first couple of lessons. She's taking you through on how you can set up your demo account. But we always recommend that you practice before you start playing with real money. So this is our last week. These are all of the lessons that Renee has covered. She has covered a lot of content, and she is a very good educator. So if you've just come across this, I highly recommend that you join the group, go back and start learning. Reach out to her. Her details are in all of the descriptions below, and she'd be willing to help you out. So without further ado, I'm going to stop sharing my screen and I'm going to hand it over to Renee. Over to you, Renee. We can't hear you.
Sorry, just gonna realize I'm on mute. Hey everybody. So awesome. Everybody's in. Everyone can hear me good. My sound is good. We're recording. I'm gonna share my screen.
Yeah, I was just gonna say I can't see your screen.
There
And then just start with a welcome everyone, because this is where we'll cut it for the short course. Yeah.
Okay. So ready to go, screen's ready to go. So welcome everybody to week 8 of our Crypto Basics Trading course. I am your coach Renee, and today we're going to go over trading psychology and journaling. So this is something that I wish that I would have done sooner. I really didn't take this too seriously when I first started, and it's really something that I think that would have helped me to grow faster as a trader if I'd done this sooner. So I'm going to share a couple of my experiences and just basically give you some feedback on some things that maybe you want to try, and a couple of different tools that you can use to track your own trades. And hopefully you can learn from your trades and then get better and improve, obviously. So, just going to go over again, like always with me, we're going to go over really quick with the slides, and we're going to go into some practical activities and show you how to use these practically. So we're going to do trading psychology mindset, common psychological pitfalls, some basic journaling stuff, how to build your own personal trading plan, and then using backtesting, and we'll go into TradingView and then do a couple of backtests. Okay. So trading psychology. So much of trading, when you get down to it, is about learning how to control your emotions, especially in crypto, because the market moves so fast and it's so exciting and there's always so much new stuff going on. It can be really hard to keep control of your emotions. And you see a lot of the major pitfalls of what happens with people is that they do things like use too much leverage because it's there, making these massive profits, not taking profits soon enough, not using things like stop losses. Like these sort of things are all emotional decisions because you get greedy, because we're humans and that's what we do, we get greedy. And so if you can learn to be disciplined with your trading plan, and then avoid those basic psychological pitfalls, you're gonna be way ahead of everybody else when you're doing your trades. Um, so having things like checklists, making sure you're in a good state of mind, that's a big thing. Don't be trading when you're tired. Don't be trading after you've had a really stressful day. Don't be trading if you've had a really tragic event happen in your life. You want to make sure that you're in a good psychological space, that you're calm, you're well rested, you're well fed. You're in a good, safe psychological space in order to make the best possible decisions. And then doing these daily routines will also help. So using something like Artemis, where you have a certain time of the day where you're doing and looking for certain things, can get you into that pattern of consistency. So when I first started, I was trading like 12 hours a day, every day, on the weekends, at night, till 3 o'clock in the morning, all this sort of thing, all over the place. And it's really hard to create consistency and create consistent results if you're just all over the place and you're always tired and exhausted, all that sort of thing. So if you can figure out what works for you, what time frames work for you, what times of the day work for you, and then build that into your trading plan and then have that consistently, you might not have as many trades as that's possible, but you're going to be more consistent over long periods of time. So common psychological pitfalls, FOMO. Waking up and something crazy happened in America and the market's gone up like 20% a day and you missed it. And then you jump in and the market crashes. So common in crypto, happens all the time. So making sure that you're not jumping onto the FOMO train, not going and doing crazy things, or crazy new token launches and you jump in, all these sorts of things. Just make sure that when you try to avoid the FOMO train, I know it's really hard, or if you're going to have FOMO, make sure that you're really, very strict in your rules, and make sure that you can have that in your trading plan, that you can do these sort of things, but make sure you stick to your rules. Revenge trading. So this is something that all traders who've been around for a long time have done. I'm very guilty of it. It's basically when you've had a really bad trade and you get really super aggressive on the next trades and maybe make bad decisions or relax your rules, relax your risk, increase your leverage to try and make up the loss that you just had. So this is just a common human psychology thing. And so I definitely am better now. So when I've had a bad day, or basically in my trading plan, if I lose 5% in one day, that's a cutoff. And so that if I lose 5% of my account in one day, that's it. I get up and I walk away. But you try not to lose that much, but having those sort of rules built into your trading account is going to save you again over the long time, because if you only lose 5% a day, you would need to have 20 negative days in a row to lose your entire account. And so that's really difficult to do. Like the statistics of having 20 bad days in a row is like really, really unlikely. So as long as you've got these risk parameters built into your trading plan, it's going to really help you from losing your entire account, basically. So I've had my trading workbook I'm going to go through later, which will show you kind of how you can figure that out for yourself. Overtrading. When you're first starting, this is like something that everybody does. Again, trading too many trades, too long, like trading for like 10, 12 hours a day, trading on weekends, all this sort of thing. Overtrading and leading to exhaustion, sleep deprivation, all this sort of thing is really, really an issue, especially like when you're really getting into it and you're excited and you're new. But just because you're spending 12 hours a day does not necessarily mean that you're going to make more money. There's zero correlation between the amount of time that you look at the charts and the amount of money that you make. So it's much better to figure out what times are best for you and the most likely times that you're going to see trades, and then condense your efforts and focus into on those times, like we've shown in Artemis. And you're going to get less trades, but higher quality trades. And then cognitive biases. So basically, we're always afraid of losing money, and then we're always quick to jump onto trends when they're doing things that we think that's going to happen. So basically, this is like you see the market's going up, everything looks like the market's going up. You jump in because everything's looking at, and then the market crashes. So this is why you really need to look around, and if every other person on Twitter, your mom, like everybody's like, oh, Bitcoin's going to the moon, that's actually probably the time that you turn around and go, oh, wait, I should probably be taking profits right now. If everybody around you is saying one thing, then it's probably about to turn. So that's your confirmation bias in one direction or the other. And then the loss aversion is basically when you're too tight. Oh, wait, that's a timer. That was my oven timer. um, so let me just count here. Oh, very annoying. That was my dinner. But yeah, so basically, we're always afraid of losing. And so you could also make decisions on one side, going too much and too over the top. You can also then be too tight on the other side and then have too tight a stop losses, or sell before you let the profits actually resolve. So you can have both sides. You can be too ambitious, and then you can be too tight and too loss averse on the other side. So this is why in your trading plan, if you're building these statistics into your trading plan and you've got rules to follow, you're going to be more consistent over long periods of time. So yes, so the moon cycle is massive. And you'll see a lot of people talking about the moon cycle. Um, so a lot of people, there's a lot of thinking and like reasoning behind actually why moon cycles work. Um, in general, you just think because all humans, okay, this is the astrological like reasoning, is that the reason why the moon affects us is because the moon pulls on water, and we're like, what is it, 70% water, whatever it is. So the moon physically does affect us. The other thing is that very large proportions of Asian populations do a lot of their own like Chinese astrology and astrology, this kind of thing, and numerology and things like this. And so a lot of their trading is based on moon cycles, and so you do get these moon cycle waves. Um, People like can infer that that is maybe because there's a lot of Asian influence in these sort of waves, because they do a lot of this sort of stuff. But yeah, we can put the moon cycle on the chart when we go into the charts, and we'll have a look. And just it's actually pretty crazy when you look at it, how well it does work. Also Annie from Trade Travel Chill, she's really big into astrology, and so she does talk a lot about that stuff in hers as well. If you haven't followed her yet, go follow her for sure. Okay, so trade journaling. So this is something where if you're not consistently looking back on your trades and then learning from them, you're going to keep doing the same mistakes over and over again. So when you're first starting out, there are apps and things you can get. I don't actually use any of them. I've always just used spreadsheets. But one of the easiest things you can do is if you have a look and just like take a screenshot and then just like write notes under it. So that's like really something you can do that's super, super easy, and just keep your own like running journal in Google Docs, or, what I've started doing is I put it into ChatGPT. So I'll take a screenshot of my chart, write some notes about it, and then I'll put it into chat. And basically I've built a GPT for Artemis inside of chat. And then so I upload all that sort of stuff, and then it helps for me to help analyze my results and different things that I can do better and all that sort of stuff. So we have access to so many cool new technologies now that can help us be better. So while there are different apps and things you can like connect, for beginners, like you don't need to spend hundreds of dollars on these apps. Just either use a spreadsheet, put it into the spreadsheet, run the spreadsheet, or do your photographs with a more like an actual diary journal where you're doing, how was I feeling? How was the market sentiment? Like maybe build in some other market sentiment indicators, like, and so you've got like more a diary style if you're a visual learner with the photos. But if you're like a numbers person, just having the raw numbers into a Google Doc where you can run the numbers might be better for you. So it's really, again, also how do you best going to learn? If you're a visual learner, if you're like a numbers person, you can do different things. I will show you, we'll go into CoinMarketCap, which is like one of the easiest ways that you can just actually create a portfolio and track it that way. And that's just a free app as well. So we'll go into CoinMarketCap and show that one as well. And so basically everybody's trading plan is going to be different depending on their own risk parameters. So if you're a younger person and you don't have a lot of money, but you have a higher risk tolerance, your risk is probably going to be a lot higher than someone who's retired and has a nest egg and is looking to have like smaller, safer profits over a longer period, like over an extended period of time. So you need to figure out what your risk parameters are for you and your personal situation and on how much money you want to do. And then you can also, as we've talked previously, about portfolio allocation, where you want to put your money. Go back to the previous talk, so we were talking about this. Um, you will need to sit down and like write out your goals, all this sort of thing, and come up with your own plan and then tweak it over time. Just learn from it, do your reviews, do your journaling, look for the feedback, look where you could do better, run your analysis through chat or out of the apps, and then you can only improve it over time for sure. So you want to be looking at things like your profit targets, your risk tolerance, and your time commitments. So this is like a really massive one for me is the time. So depending on how much time you have really depends on what time frames you should be looking at. So if you can only afford to put in a couple of hours a week, then you should be looking at the daily charts, the weekly charts, the long-term charts to do long-term trades because you don't have the time to be able to invest daily. If you have a few hours a day that you can like you can do, then maybe you're looking at day to like 4 hour trades. If you have more than a couple of hours a day and you're looking to do more of the day trades, then that's when we're down to like the 5 minute charts, the 15-minute charts, and you're looking at doing these swing trades. So that's one of the first things you need to do is to define how much time can I invest into trading. And that's one of the biggest things that's going to determine is the time frames that you're looking at. Because there's no point in looking at the 5 minute charts if you can only look at the charts an hour a week. It's just you're never going to be able to catch the moves on those time frames. Sweet. Awesome. Yeah, I'm happy when my crypto goes to the moon too. We all are. So yeah, so time commitment's a big one. Again, like I said, risk tolerance, depending on your risk tolerance. I've gone over my personal entry exit criteria, and hopefully you've picked up on a lot of the sort of things that I'm looking for. You build that into your plan. And you say, this is the checklist of things that I'm looking for each trade. And then you tick them off as you get them. And then you might not get all of it. You might only get like 4 out of 5 of those. And if that's okay, maybe you have an 80% rule where as long as I get 4 out of 5, that's an entry for my trade. You can build that into your trade as well. Position sizing and stuff. I'm going to go through this chart in a second. I'll show you how I come up with the position sizing for things. And of course, it's always about reviewing. Maybe you do it once a month, you go over your trades and you go back and you do this sort of analysis. We'll do a quick little back test as well. So using Artemis, I'll go over like maybe we'll do over those couple of days that you guys went over before, and we'll have a look to see if there's anything else that we can see over the last couple of days, if there's any more trades we could have got. And then you can figure out your win rate, average return, max drawdown, all this sort of stuff. You can figure out in these sort of spreadsheets, and you can completely do it to exactly your own plan and exactly how you want to do. And then we'll do a quick back test again into TradingView. Awesome. Yay. So this will be the journal for you guys. I always forget to come back and check this. So this is your challenge for this week. This is the quiz. And then I did a couple of, in your learning notes, there's a couple of links there that will help you go right into depth on how to journal. And then we're going to go into CoinMarketCap right now, and I'll show you just how to do one quick trade. And then this is a video that I did a while back on the spreadsheet we're about to use. So we'll go through it then, but you can also watch this video and go into more details on how I use the spreadsheet. So let's actually do the spreadsheet first. Share. I have too many screens open. Where are you? Not that one. Where is it? Oh yeah, that's where I saw it. So if you guys are in the group, a really good example of a diary style trading journal is the one that Margaret did in the group. So if you haven't checked that out, go check that out. She did a whole PDF with like the photo and the notes in it. So that's a really good example of how to use a trading journal as a diary style. Okay, here we go. This one. Okay, so we'll share this link with you guys later as well. Let me do this. Put you up here so I can see you. Awesome. So you can see my spreadsheet, guys? Yep. Okay. So this is a very basic trading calculator using my specific criteria to do trades. So one thing that I use in particular is volatility when I'm trying to determine position sizing. So this is my volatility calculator based on what's called an average daily range, so ADR. This is also built into the Trader's Reality indicator. If you guys aren't already using this, it is already part of that indicator. And so basically the average daily range is the average percent that a token moves per day. So I've broken it down into like 5 different ranges. So we've got usually Bitcoin moves less than 5% a day. Most of the time it only moves 1 or 2% a day. So Bitcoin, because it doesn't move very much, I'm comfortable using 100x leverage on Bitcoin, and I only ever use 100x leverage on Bitcoin because otherwise it's almost impossible to make profit for me. So for Bitcoin, I'm comfortable using 100x leverage. The next step down is your top 20 like stable, like blue chip, big top 20 coins. They only move like a little bit more, so that's between 5 and 7% a day, which if you consider any other, like any asset anywhere else in the world, 5 to 7% per day is obscene. So still, I'm happy to use up to 75%, 75x on these 5 to 7% because I'm very controlled in the rest of my down here, which I'm going to show you. I'm going to go down to the majors, the minors, and the meme coins, broken down into the average daily range. And so if you're trading a meme coin, you really only need to have a 10x to still get literally the same returns in like even less time than you would trading Bitcoin at 100x because they move 10 times more, or like at least double the time. You don't need to have 100x leverage on a meme coin. That's just looking for disaster. So this is just something that I've worked out for myself. Um, this is like the average of the trade that I would do on the coin. So say Bitcoin moves 5% a day. And if you remember when we were going over those charts, we were getting between 1% and 2% per day. So this is my challenge formula. My goal was to make $250 a day. So that's all I would need to do. So all I need to do in my trading plan for my goal for the day is to find one trade on Bitcoin. I trade for 2%, which would be my take profit, and that I would make $250 per day. And for the challenge, you need to do that for 10 days in a row. So this just gives you an example. So from the next funds, I would need 3% because it moves more. I'd make the same amount of money in a 3% move using less leverage. So you can kind of see the way that it works. Same thing, meme coins use way less leverage, but the trade is going to move a lot more because it's a meme coin. They just move more. You're going to make the same amount of money goal on your trade depending on that. So this is how I ended up using my take profits as my goal in my trading plan, is because I didn't need it to run, like 50%. I'd be happy to take it at a 6% move, $250 a day. That's it. My trade's done. Closed. I'm out. I step away. So if that's the sort of thing that you're looking for, having those take profit goals in your trading plan can really help you psychologically, because otherwise you could just leave it open, and then again, like if you go to sleep and then you could just lose the whole trade because something could happen overnight. So having these take profit goals in your trading plan, again, you can change them to however you want, but just that's a simple explanation of my goal based on, and this is on a $25,000 account. So my profit goal was 10% in 10 days. This is just for the challenges that we do with HyroTrader. They're based on like times. My max daily loss. So this is the one where I was talking about. So always try and have a max daily loss limit that when you hit, you just walk away. You sell everything, you walk away, that's it. And so my max daily loss limit is 5% of your total at that point, which is like $1,000. So you trying to get all the way to 5. So about $1,000. If you lost $1,000 in the day, you lost the 5%. Stand up, walk away. That's trading rule. That's it. Done. There's no excuses. There's no, oh, it's going to come back. It's just end the trade, step away, walk away, close your charts, come back tomorrow. Having these hard loss limits per day will save you so much in the long run, because if you just let it slip, I'll let it run, I'm going to let it go a little bit more, and this is when your account can really start to get away from you, and all of a sudden you've lost 10% a day, and then if you lost 20%, and this is where it can be really dangerous for your account. So again, if you only lose 5% a day, you would have to lose 20 days in a row to completely lose all of your trade, like your entire trading account, which is like really, really statistically an anomaly if it would ever happen. So it's very unlikely that would ever happen. Another one to have in your consideration is a max position loss per position. So usually I would have more than one position on different tokens at a time. So having the 3% loss for me per one token is also something good, especially if you've got multiple trades going on. So try not to have a max loss for that. And then also having the max daily profit. So this is something that's also something to think about, is to not get greedy. So it's like, if you make $1,000 in one day, it's just that's okay. Take your profit and you can walk away and be happy with that and then come down the next day. There are other things that I would do, like leave a runner, like take like 80%, 90% profit and then leave a small runner with a trailing stop. That's something you can else like work into your trading plan, but work it into your trading plan. So if this is part of your trading plan, I take 80% or I take 90% of my profit at my take profit, and then I leave a 10% runner with a trailing stop. Write it into your trading plan. Like that is an absolutely like perfectly acceptable thing to have in your trading plan. But if you leave it open, oh, I'm going to leave 50% open. Oh, I'm going to leave 25, that's again getting back to being greedy, and then that you then risk losing that entire profit if something happens overnight when you're not watching the market, all these sort of things. So build these sort of like goals into your trading plan, and it just gives you a bit more structure on how and when to take profit over time. So this is the thing you need to consider is you're losing positions in a row. So 10, this is per day. Having like smaller trades. So this is like if I would have like smaller trades, which could happen like with my high frequency trading that I was doing. So I would have losing positions in a row. I would have to risk these trades at 0.5 to hit my goal of 10. So this is 10 by 125 is this number here. So I would have to lose 10 of my trades in a row to hit my daily stop loss because I was doing so many trades in a row, like in my high frequency trading, my day trading. So I want to risk no more than 0.5% of my account per trade, knowing that I'm probably going to do 20 or 30 trades in a day. I would have to lose 10 in a row, which again, statistically is not likely. But if it did, that would hit my daily stop loss. So per trade, I'm risking 0.5% of my account. And then we break it down into the leverage. So I'm using leverage here for my meme coins. My leverage is here, my total position size based on this over here, amount with the leverage in the fees. This is the max stop that you're going to be able to use to then stay within your loss limit, if that makes sense. So, and this is then based on all the different types of leverage, what the percentage leverage is, the position size risk, how much the amount would be with your fees, and then the max stop that you would have to put to be able to stay within your loss limit for that day. Awesome. Does that make sense, guys? Does that like kind of show you how you can break down your trading sizes based on leverage and size of your account? So yeah, we'll share this link with you guys so you can just come in, you can put your amount in here, you can put like all of these different numbers. So maybe you want to do 5% goal. Maybe you don't want to be super, you can just do 5% per day. And then we'll just change these numbers for you. Maybe you want to be super conservative and you want to lose 2% per day and then lose 1%. Like you can just change these numbers around. And then it will change these down here for you. So now, if you put this loss down here, you're only going to be able to lose 4 in a row. And if you're doing 30 trades a day, losing 4 in a row is probably going to be pretty likely statistically. So this shows you that maybe this is not a realistic expectation. So this is going to be more realistic. This is more realistic. So yeah, and that just shows you this is the goal over the 10 days and how, like showing you guys like we did the other day, doing 1 to 2% per day on Bitcoin is extremely reasonable 2 or 3 days a week. So it's like that in those time frames with those small percentages over time, you're going to be able to make these consistent results over time. Okay. It's a quick thing. Okay, next up, we will share. Here it is. Okay. So. Okay, so now we're in CoinMarketCap. So let me just actually do this. Sure. This one. Okay. So you guys use CoinMarketCap? You guys ever seen this before? So this is where we basically have like the daily, it's like where we track the prices of the coins over time. So please click here. So if you ever want to have a look at the price of the coins, like all the charts, all this sort of thing, if you want to do trending coins, if you want to do news, like there's all sorts of stuff on here if you want to have a look. But if you're in CoinMarketCap, if you come over here, they actually have a portfolio thing. Yeah, exactly. Yeah, Martin, you should do the 10-day challenge. And then if you get through, then you get the 25K. So it's a really good opportunity if you guys want to do it over time. So this portfolio needs a transaction. So what we're going to do, can you guys see my Bitcoin chart? Yes? Yep, cool. Okay, so you guys might have noticed this before when I'm in my Bybit. I have my charts, my tokens broken down into those 5 different layers based on their volatility. So this just helps me to know, without having to do it every day, the general idea of where the tokens sit and what leverage I should be using on those tokens based on their volatility. So you got our crazy meme coins down here that they're doing the crazy ones. So I'll be using the 10% leverage on them. These ones I'd be using the 25x, 50x, 75x, and then the Bitcoin at the 100x. So that this just helps me to kind of like not have to think about it too much. But over here we've got our Trader's Reality Indicator, which is the colored one, which I love. But you can see here high ADR and low ADR. So this is the average daily range. So if you see here, the average daily range on Bitcoin is only like 2.78. It's not even 5% anymore because the market's been kind of just consolidating, going sideways. It's only almost 3%. So it's really, really small. Ugh. Yeah, I'd classify it as a. I don't. I don't think it's a meme coin because it's like supposed to have actual like it's not like Trump coin. I would think Trump coin is a meme coin. I think that World Liberty is it's supposed to have some sort of underlying fundamentals. So I would classify it just as a shitcoin or an altcoin. Whereas I would say Trump coin is definitely a meme coin because it's based on nothing other than just Trump as a meme. So there are a little bit of justification between the two. So I would still, but let's have a look actually. I'll put it in here. Let's swap crypto, swap perpetual. Sweet. So you guys, if you have a look here, so we've got the USDT and we have USDC. So I use USDT, just personally Tether, but if you do use the USD, if you use Circle, you can use that. Make sure that you're selecting the actual token that you're using inside of the actual thing. So we're going to click on this one. Let's have a look. Ooh. Yeah, look at this is so low ADR down here, high ADR, 23% ADR. That's definitely meme coin like level. So based on my classification for my trading plan, this would be classified as a meme coin because of its ADR. Like 23% a day is absolutely just a joke. So I would not be using more than 10x leverage on this for sure. Because basically when you get these moves, let's have a look. So this is like just one move, 8%. So if you had 10x leverage, and you had a negative, so that's actually probably a better idea. Let's look at so from here. So say you got in, oh, this looks like a really strong move. I'm going to go up here. That's really good. You'd make a 7% profit. But then if you let it go down, you are liquidated at 10%. With a 10x leverage, your entire position is liquidated with a 10% move down. So you are then liquidated in one day. So this is the risk that you're taking, even with only a 10x. So if you had done this and say this is when you were in sleep, it looked really strong. Like, yeah, everything's like green candles, green candles, green candles. Yeah, let's go here. You could have lost your entire account if your risk management wasn't correct in one day, in one move, even at 10x leverage, which is a tiny leverage really for crypto. So this is why when you're doing your position sizing, classifying the tokens based on their volatility in crypto is such a massive thing to take into consideration. Because, yeah, if you don't know that this coin can move 25% in one day, you would completely like just, if you were basically trying to use Bitcoin criteria and then trade this sort of coin, you just get liquidated straight away because you would just not know this sort of thing. So having these indicators that built it in like this so you can see it and make it visual there for you, but then always just make sure that, yeah, you're checking as well. 23%. That's hectic for sure. So definitely trade it if you want, but just make sure that you're being really strict with your criteria and using low leverage. Like with something like this, you could even use 5x leverage and still get yourself in trouble. So let's have a look. Let's do some little back testing on here. Yeah. It's been hard the last few days because everything's just kind of consolidating. We haven't really had a lot of movement happening. Actually, if we go back to Bitcoin, this is actually really interesting. So, I know you guys, I've talked to you guys about the psychological levels. So the psychological level is the level they build over the weekend. And in general, if they're going to move, they move away quite strongly on either Monday or Tuesday away from the psychological level. And that's how you know that there's going to be a nice move. And that's the way we either get the fake out move up and then down, we get the fake out down and then up. But we've really just done nothing except for kind of like go sideways around these psychological levels all week, which is why it's been really hard to do any sort of trades because it's not doing anything. They're consolidating it. They're holding the price down. We have, let's have a look. Relax. The quad witching is today, I think. Calendar. Yeah. So there's a lot of news coming out of America today. So yeah, the ADR lines are in that Traders Reality indicator, that one that has all of the stuff together. So that's why I really like it, especially if you have one of the cheaper plans. It's got like 10 indicators built in one. So if you go to Traders Reality, I think it's Traders Reality Main, it has all of my moving averages, plus it has those psychological levels and it has the ADR all built into that one indicator. But if you look up just ADR, like average daily range, there's probably a whole bunch of individual indicators that you can just pop on and it will just do that. But that'll make it just one extra indicator. And if you don't have a lot of indicators, then it's just easier to kind of have it all in one indicator, if you know what I mean. So I would be assuming that we will get a big move based on what happens tonight. So the general consensus is that the Fed is going to decrease interest rates in America tonight. And so that's at 4 a.m. our time. So it's like they're saying it's like, so basically this is the previous, they're forecasting a 0.25, so 25 basis points reduction, which will probably do something. But maybe nothing crazy. There is talk that they might do a full 50 point decrease, like point, like so down to 4%. Which while it sounds like it's a good thing, it actually is at the point now that the American economy is basically falling into the toilet. And so we could see that we get a really big dump if we get a larger than expected cut, even though usually rate cuts are good. So this is kind of why we get these periods of time when the market is really waiting for news, we get these consolidations. So this could be one thing. If you're not going to stay up until 4 o'clock this morning to check the FOMC, we could wake up tomorrow and Bitcoin's at like 100K. So that is like, we don't really know. So this is the thing. Rates going down is usually a good thing, because that means it's cheaper to borrow money. But because of all the other stuff going on in America, if it goes down the full 50, it could create a really negative situation, even though you would think that decreasing interest rates is good. So this is why we don't know. Yeah. So it could be that they're going to use as an excuse to like go up, but we won't know until we see if we get the full 50 or if it's just going to be 25 and maybe not get too crazy. Because if we come back to our charts, let me go back up to like the higher time frames. This really big area of interest is right above where we are right now. So this is the big M formation that we've been looking at. Well, I've been looking at. So it could be maybe we pop up here, take out these red vector candles. So maybe we spike up and then we drop down. But there's massive amounts of orders down here. So these orders all down here are, I would be, my personal opinion is that we're going to come down and get these before we make another new all-time high. But this is the thing, we won't know until it happens. So all we've got to do is be waiting and watching when it happens and then make our decisions based on that. But looking at this, there's a lot of areas of interest just right above here and there's right down here below. So this has been a very strong move. But this is also what they can call like a dead cat bounce, which is like a lower high before we go down even further. But the general consensus is that this is around 100K. So even then, it's really not that far away. There is a lot of interest at the 100K level. And then if we look here, this is that big candle, the area of interest, and this is the big candle up here. So if you have a look, this is very distinctive when we were talking about our candlestick formations. When you have these sort of candles shaped like this is your stop hunt candle, the red candle. It's basically a false move, right? And then we get this huge push up. So this huge manipulation level. And then what it does is creates this area of imbalance, which is then this green vector candle. It's now also right around this area where the 200-day moving average is on the daily, which is a huge level of support, which we haven't touched this whole bull run. So if we could come back down here, find support around this level, around that 50 level, if you have a look down here, this is what happened last time. So we had this consolidation area, we broke up, came back down and found support on this area. It did take a while to kind of push back up, but this was like the massive push up that we got from the last time as well. So could we come back down here, find support, come up? If we fail, that's not great because that's where the bear market was. So this is why we're just waiting right now. We're waiting. What's that? Yeah, 105. It would be more bullish for us to just go straight up. But that's one of the biggest things. You have a look here. Oh, no. There's no green candles. There's no red candles. There's no market making manipulation. It's just kind of floating. there's no real manipulation candles, which is not showing the confluence of the market makers pushing the market in the direction that they want it to go. So this is what we really want to see. We want to see these big green candles, big green candles. That's them pushing the market. Yeah, down here. Pushing out here, pushing out here, pushing out here. The green candles, green candle, green candle. No green candles here. Green candle into the fake out. No green candles here. So this is all going up. We're not getting any of that on this side. So the good point, if we do go down here, is that if this is not the actual top of the market, which we won't know until God knows when. They're talking about the extended cycle. So basically, if we get a nice consolidation down here, we could see the market rally through the middle of next year, maybe. Whereas if we do take support here and then push up, we probably only have 3 months and then the market's over. So there's good thinking and like bullish theory that if we do rally here, it is good, but it's going to be very short, sharp. We'll come probably straight up here and maybe hit 200K, like 150K maybe even. But if we come down here, find support, and then we rally through the end of next year, maybe we get to 200, 250 by next year. So again, this is why we need to be watching the market over different time frames as well. So you've got to always start and have your macro view and see what's going on in the macro scale. Because if you're not looking at the daily charts, you might not have these levels in your area of interest. So this is the area above, and this is our area below. So will we come up here first and then down? Or will we come down here and then go back up? This is where we've got to be able to take into higher time frames into consideration when we're doing our analysis. And keep an eye on what these indicators are doing on the higher time frames. You have a look. So yeah, if you look at our indicators right now, we are way over in the red. This is the daily chart still. So we're way over, we're overbought. We have a lower high on our MACD, so there's our M formation. This is our divergence. This is not a confirmed high yet, so you can't really do it, but so it's not confirmed yet, but we've got a bearish divergence on our MACD, which is showing that the move's going up, but it's losing strength. And we're also doing this when we're really overbought. So again, this is not showing strength in this move. So there's not a lot for me to say that it's going to be continuing, not in the short term. This is one of my other indicators. It's called Market Cipher. It's also very overbought. So in general, when we want to see good, strong up moves, we want to see the green dot down the bottom and see how we've got a green dot here at the top. That's not a good spot for the dot to be. You want the dot to be on the bottom. So this would have been a really good entrance on this indicator. Down here on this green dot, which pretty much got the exact bottom of that move. So yeah, green dot at the top, not super great. Can be okay, but like that, see how like low that one is? It's just not a great position for a really strong move. But yeah, let's go back down. Okay. So just for an example's sake, we're going to buy some Bitcoin at that last point. Let's do that. So say this is that trade that I was talking about that I took down here. So He took this really strong move here. So let's say we broke up here. This is the entrance point. It's 108, 103. So we're going to go into here to Bitcoin. We're going to buy 1 Bitcoin because we're ballers. And we're going to do, what is it? September 1st at 5 o'clock. September 1st. Yeah, perfect. 108.69. Awesome. You can add the fees if you want, blah, blah, blah. You would get that from your, when you win Bybit, when I showed you when we did the in-depth, it will show you all your trading fees if you go down the bottom. And we're going to add that transaction. So 100% Bitcoin, woohoo! And so this will show you hour, 24 hours, 7 days, how much it is, average price. If you buy it over time, it will show you the average price that you buy it over time. It'll show you your profit. It'll show you all this sort of stuff. And then there's, you can add extra transactions as you do them, add notes, add fees, all that sort of stuff to make it as accurate as possible. And then you can also like show all your transactions, all that sort of stuff. So using this is like, if you're not doing too many transactions, is a super easy way to just keep a portfolio and it'll show your movement and your profit over time. Super easy and free. So like super easy. Awesome. Okay. I think that was all the stuff that I had on my list for this. Was there any questions from anybody about the spreadsheet or doing the portfolio or anything else when it comes to psychology or, oh, actually, I was going to do the moon ones, wasn't I? Okay. Moon phases. Just for shits and giggles. Okay. So you see here, bull moon, bear moon, bull moon, bear moon, bull moon, bear moon. That one, no, that one didn't work. That one did. That one didn't. That one did. That one was really good. See, if you had just bought when you got this bull moon signal like this, just look at the results. It's like crazy. So let's use our little long position. So let's get in here. Where is it? One here. Yeah, this one you'd have to have a pretty wide stop, but what's that? Yeah, so this one you would have got stepped out, but if you'd done it short term, you still would have got that short little move. But this one you'd still be in, the good one. 33%. That one failed, but then this one, another 10%. Pretty silly, but it's not wrong. It's not wrong very often. If you just literally bought on that bull moon. Not too shabby, not too shabby at all. So obviously no trading is like 1,000,000% right, But that's 1, 2, 3, 4, 5 trades since in 6 months. So that's 1 trade a month. 5, yeah, what is that? 5 out of 6 times, 5 out of 6 months, the bull moon was correct. So yeah, so it's just something else fun you can just add to your trading arsenal to be able to be useful. It's like, hey, maybe it's not a great time to be going long right now because, oh wait, when's the next bull moon? Bear moon. That's here. 28. That's Saturday. So the next bear moon is on Saturday. So is right now the best time to be going long? All of our other indicators are overbought. Everything's over the top. We've got an M formation. We've got bearish divergence, and we have a bear moon in 3 days. Yeah, I don't think right now is gonna be a great time to be going long. So just again, nothing, something else fun to add to your arsenal, to add into your trading plan, to just have a look and maybe ask the universe if it's the correct time to be going long or to be going short. So yeah, could be interesting. Definitely, if you check out the news tomorrow morning, we might see a nice move tomorrow, based on the yeah. Yeah, so this is why I did write a comment in the group as well about the trading view different levels. So I do have the high level. I have this premium level, but I bought it at like 60% off when I bought the whole thing. So most people, like, you don't need to spend $100 a month. This is useful for most just normal traders. Um, so if you're not day trading, the essentials is probably more than enough. If you are day trading and need to use multiple time frames, I was using this plus version because you get the 4 charts, because I have the 4 time frames, plus it has 10 indicators. For me, 5 indicators, if you have a look at my charts, 1, 2, 3, 4, and I've got 5. So that's 5 indicators, and then I have 6 here. So it's like, for me, just having the 5 wasn't enough, but you guys don't need to use all these indicators. This is just me and and again, I don't use them all at the same time. I just have them on the chart for when I'm using. These are the 3 that I use 90% of the time, is the SMI, the MACD, and then the Trader's Reality. They're the ones that I use. So you could get away with that with the 5. But if you want to add anything extra on top of that, then the 10 might be a better deal. And again, it's coming up soon because American Thanksgiving is November. So keep an eye for Black Friday, which will be November. So in a couple of months, they do massive 60, 70% off sale, where if you buy it for the whole year, it's like really, really cheap. Highly recommend to do that if you can afford it, because otherwise it can get a little bit expensive. But I think it's worth it. Awesome. Okay. So that's 8 o'clock, guys. Thank you so much for joining all of us. Yeah, day trading. Okay, let me just finish off with a little rant from my personal experience. Um, Day trading is incredibly difficult, and only a very small amount of people are very successful long term. But it's mostly because of one of 2 things. One, they run out of money because they don't have um, the appropriate risk management and things. And so most people go broke before they actually learn what they're doing. And the second reason is that they give up too soon. So any reasonable trader who tries to, or anyone who's trying to sell you a package or sell you a course or blah, 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 and says, oh, you can be a successful trader in 6 months, is lying to your face. So it takes on average 2 to 3 years of consistent trading, over 2 to 3 years, to become consistently profitable. Because it's just, there's so much to learn. Not everybody has the same amount of time to invest. It's just, yeah, if anyone's trying to sell you something and says you can do it in 6 months, yeah, if you're doing it 12 hours a day, 7 days a week, sure. Yeah, maybe you could do it in 6 months, but the majority of people, it's going to take 2 to 3 years. And most people either run out of money or give up before then. So just um, keep just learning more and doing whatever you can over time. And eventually you'll get there. So it's just, you've got to put in the time and the dedication and just constantly want to be learning and improving. And as long as you have your risk management in place, you won't run out of money, which is the biggest thing. Like every crypto trader that you've ever heard of has been liquidated. Everybody that I know has been liquidated at least once on one of their accounts because they just didn't have risk management. So hopefully if that's one of the things that I can teach you guys is risk management. And as long as you're using these charts, if you're using your plans, all this sort of stuff, you won't lose all of your money. So yeah. Yeah, perfect. That's the thing. There's so much you can do. Like, the NFTs were big for ages and people loved NFTs and they got really into that. Some people love the DeFi stuff and they love trading on Pumped Up Fun and like love being on like Discords and like doing that sort of thing. So that's what they're going to be really good at. What I love is doing day trading and doing day trade on in the big traditional styles, which is like trading on Bybit. I don't do much DeFi trading because it's just not my style. So if you can find something that you're really interested in and then focus on it and just become really good at that one thing, you're going to be successful over time for sure. So yeah, hopefully I've shared some tips and tricks and can give you a little hope and hopefully can prepare you to become better traders by learning and growing and reflection and support too. Support's a massive thing. So support each other, chat, post your trades, and then yeah, we will all be good traders in the long term. Okay, guys, thanks so much. And yeah, any other questions, of course, always in the group chat. And yeah, we'll see you guys next time. Yay, thanks, Michael. Bye.